The level that we've seen a big jump is profit after tax. And that profit after tax has been largely the contribution besides the business has been that we have a tax allowance this year rather than a tax to pay out, which happened last year. And the reason that's the case this year is because we have been investing. And as the power stations get commissioned, then we get permission from the government to apply for the tax allowances. And that is why last year we paid out more than $1 billion in tax. This year we are in more than $1 billion in tax credit. And that is why we see the profit before tax being lower than the profit after tax, which means we're taking in almost like taking in money from tax because it's a credit. But when you look at the business, last year we commissioned 3 power stations. We commissioned Ngure power plant, which is 20 megawatts. We also commissioned an additional unit at Kindaruma and enhanced that power station from 40 megawatts to 72 megawatts. So that's an additional 32 megawatts. And we also commissioned a small wellhead unit in Okaria, 5 megawatts. So those power stations have attracted the tax allowances. As we go forward, we will see more tax allowances become due because you do know we are already constructing another 280 megawatts in Okaria. And we are also going to install wellhead unit technology in Okaria, an additional 70 megawatts by December 2014.
Despite the double-digit growth that we saw in per unit sale, revenues registered a very marginal growth. Give us an indication why we saw that modest growth in terms of revenues.
The reason the revenues didn't go up a lot is number one, because we are very heavy, we are in the investment mode. The Kindaruma power stations came very late in the year. The Ngure power station also came in from August last year, but it's a small plant. The wellhead unit also came in last year, but it's a very small unit. The big jumps in the electricity business will begin to happen when we begin to commission the large plants. We are on queue to install the first 140 megawatts will come in the month of April next year. And that will have a sizable contribution, even in the 2 months that it will be on by the end of this financial year. So we're going to begin to see those big jumps. As we've already said today, Kengen's installed capacity will move quickly from 1,200 megawatts to about 2,000 megawatts within the next 40 months.
You mentioned Kengen is on an investment mode, and besides the 250 megawatts, maybe you can give us an indication of the new projects that are coming on board and a breakdown of the 2,000 and 2,500 megawatts that you plan to have in the next 40 months.
The 2,500 megawatts comprises of geothermal power that will be at 700 megawatts. We also have a hydro plant that we've already commissioned, 24 megawatts. We will also add 120 megawatts of wind power. 20 megawatts is already under construction at Gong. The other 100 megawatts, we are working to put that in Isiolo, in the Isiolo area, where we have been undertaking feasibility studies. We also are hoping to form partnerships with a partner to develop 700 megawatts of gas power. These will be at the coast. We are actually thinking that it will be in the Dongo Kudu area near the Kenya port, the Kilindini port. We are also thinking of partnering with someone to do 960 megawatts of coal power. We are looking at 2 sites, Kilifi and Lamu. Lamu might be the place to be because of the port that is coming up at Lamu as part of the LAPSET project. So another 960 megawatts there. So that's the total of the 2,500 megawatts. But as I said, we think that's the minimum, because in the 5,000 megawatt story, Kengen will continue to feature.
This being a very capital-intensive sector, how much do you need to do all these projects that you've just mentioned, and what is the source of financing to power these projects?
Kengen needs to raise $5.5 billion within the next 4 years. That money will come in two portions. The first portion is equity, and the second portion is debt. Equity is required first because we have a capital investment structure of 30% equity and 70% debt. This is to maintain the health of the company. For that reason, we need to bring in the 30% of that $5.5 billion not too long from now, because it has to come in before the debt to maintain that debt equity structure. And for that reason, we are looking at raising $1.65 billion from the owners of the company. The owners of the company are both government, which holds 70% ownership in Kengen, and private shareholders who hold 30% of the shares in Kengen.
And finally, Simon, you did mention you're going to have 30% equity and 70% debt. Give us an indication in terms of the capital raising ventures through the stock market. What is the time frame that you're looking at?
We are thinking we've got to do this before June next year. We need the money to put in, we need the equity to be able to bring in the debt. And right now we have projects ready to start construction and others in construction. So we've got to move that very quickly. So by June next year, we expect to have brought in the equity portion, and the debt portion will continue to roll in as we sign up the project.